Mayuresh Joshi of William O'Neill joins us right now on the show. Mayuresh, good having you. Thanks for joining in. Can I start off with that, Mayuresh? I mean, NBFCs by and large seem to be weak, but the market is selling off a consumer finance leader like the business model has completely come to an end. I mean, what's happening here? Is this realization that we don't know when this will come back and therefore get it out of your portfolio, or is there something else?
Two aspects. First of all, afternoon, Neeraj. I think what had happened in terms of the outstanding growth that all of these pedigree companies had posted, including Bajaj Finance, and absolutely nothing wrong with the business model. But I think the outstanding numbers that they were posting quarter after quarter, I think the markets are in a way skeptical in terms of whether these numbers will get repeated. Obviously, I think the washout in terms of the provisional numbers that they've put out, I think on a quarter-on-quarter basis looks very, very soft. But Q1 is expected to be a huge washout in terms of all the parameters that we are looking at, advances, growth, what happens in terms of the exposure towards the unsecured part of the business, including SMEs, MSMEs, and what kind of an additional provisioning might be required on that count. And the second element is when the markets were good, right, and when the trajectory was in the right place, the valuations at which all these counters were trading at 4-5 times book, I think the market was still willing to give that sort of a premium. But in doubtful conditions like this, and when you probably don't know, and when you're pinning hopes for a second half revival, whether that demand curve come back very, very strongly post Q1 in Q2 or in the second half itself, I think time will be the best judge, and the numbers will probably do the judging from a price perspective. So I think nothing wrong with the business model. I think an absolute solid and a robust business model. However, I think all these conditions that are probably laying forth for the stock are probably leading to the huge underperformance that the stock is probably going through at this point of time. So I think NBFCs are in a tough space at this point of time. Therefore, I think I've always maintained wait out for results. I think there is no need to rush into these companies.
Yeah, okay. So wait out for the results, maybe the ensuing commentary and all of that. And I just want to draw viewers' attention, people who particularly like Bajaj Finance as an investment idea. Keep in mind, in the con call, the management had stated that at given different scenarios, right, that if the lockdown ends on 14th April, then there would be recovery could come in by X. If it ends on 30th, then it's X, and then it's 15th May, then it's X. As of now, it's definitely not ending by the end of April, at least 3 days of May, maybe more, and therefore people should be wary about this one. 8.5%, 1984 and counting. The other bit is, Mayuresh, the kind of damage that we're seeing in almost all the banking names, the large cap ones. What's your sense here about whether these give you the opportunity to buy into any of the high quality ones, or would you stay on the sidelines for these as well?
No, I would, right, Neeraj, because similarly to what is happening with the top-notch or the top-tier NBFCs, for the top-notch private sector banks, I think the scenario is no different. So when you're talking about advances growth actually coming off, I think that's very well assumed for Q1 of this financial year, which means that the annualized earnings take a hit. Again, I think the entire revival in terms of loan growth picking up quite significantly, and what kind of a hit do they probably take specifically from the mid-corporate segment? I think that is going to be very, very substantial in terms of the quality of earnings that they will report. The second element obviously is a few instances of what we've probably seen in terms of exposures for a few clients outside India. So what happens on that front? Because if global trade comes back very, very softly, I think you're expected to see the overseas operations for a few of these banks and the lending part of it also coming under some kind of a pressure. Third, again, I think in terms of the provisioning aspect, if provisioning is needed to get accelerated in terms of all the unsecured lending that they probably got, even though the moratorium probably has got extended from the RBI perspective, I think the quality of earnings is something that the street is extremely skeptical about at this point of time. So I've always maintained that till this pandemic and the curve starts starting out and comes off, I think the next few months, I think it will be a consensus trade, pharma, stroke, FMCG, stroke, specific specialty chemicals. I think the high beta players, including your quality banks and BFCs, will come into focus post Q1, or rather at the end of Q2 itself. So I think the second half is where I think the entire focus will be in terms of all these beta correlated sectors moving very, very strongly. And we've actually seen that in the past period. So I think if you probably look at what had happened in previous crisis periods as well, I think these stocks get beaten down the most. They do try to find their feet over the next couple of quarters. And once the market gets a sense that the worst probably might be over in terms of numbers, and again, I think the future outlook probably looks a little bit better from an economic standpoint and the business standpoint. I think they make a huge rebound. My own sense is that wait it out. I think there are quality stocks within all these pockets that you're talking about. I think there will be better times to come over the next few weeks and months. And the returns that they can give from the second half can be stupendous for the next year and a half.
Okay. Mayuresh, the other one is Reliance Industries now. Is the rally too much, even for a stock which has got such a large behemoth, global behemoth as a partner? Or would you believe that there could be more in store? Fundamentally, but can Reliance add more weight to itself?
So again, Neeraj, I think the developments that have obviously happened are the steps in the right direction. I think Jio, obviously, the kind of enterprise valuation that it gets, the kind of reported EBITDA that it can post, and the deleveraging that happens on the balance sheet is clearly something to be seen and observed. The second element, obviously, also is in terms of the overall structuring within the MSI basket itself. So if you probably look at Reliance positioning within the MSI basket, a lot of the passive investors will also probably need to pump in. So I think the move that you're probably seeing is both in terms of the expected synergies that will come through, specifically from the Jio deal, as well as the passive buying that is expected to readjust to the overall MSCI balances. The third, obviously, is the kind of scope that they've got specifically on the retail side of the business. So I think Jio Mart and the kind of strides that they can do over the next few quarters in terms of local kiranawalas and getting the entire small business ecosystem in place, I think there is a huge potential on that one. So I think it gets offsetted in terms of the core business actually coming under softness because of the fall in crude prices. Though Reliance has multiple feedstock options, and the reported DRMs will be better because of their middle distillate portion and the new regulations that have come through from Jan 1st. I think the offsetting effect will take place. But I think Jio and retail should probably hold up the earnings element at least. And again, as I said, the passive buying, which probably mandated the kind of move that we've seen. So anybody holding on to Reliance should clearly hold up.
Mayuresh, what about you? How do you view ICICI Pru? And if aside of ICICI Pru, what about the other peers?
No, so for the space as a whole, right, Neeraj, I think the kind of changes that they're doing in terms of the product mix itself for the last few quarters, I think that had started giving them a reasonable amount of momentum from a yield perspective. The second element, as you rightly put forth, Neeraj, is the persistency. I think that needs to get monitored very, very clearly. What happens with the VNB part of the business element? Because I think the value of new business is extremely critical for insurance players. And they've pretty much gone up the value curve because of the VNB margins actually sustaining at higher levels. The third element specifically, I think you need to break down individually the products that each of these companies are doing at this point of time. I think a high skew element for ICICI Pru also is through the ULIPs that they still have in terms of their portfolio mix. And what happens in terms of the overall business perspective from a premium perspective because of the new tax changes that have happened for tax slabs to be chosen for people below 10 lakhs, which probably can also involve a few people opting out of insurance policies as a whole. So yeah, I think there is some element of a business hit that can take place. Yes, from a sectoral perspective over the next 5 to 10 years, I think this is one sector because of the sheer under-penetration can do really, really well. But again, I think insurance companies need to come out with smart packaging as well, in my opinion. I think it's not just about tax saving. I think it's about saving lives is what the message should become. And I pretty hope so. I think all these products will come through over a longer period of time. But at this point of time, I think we'll wait and watch for this part as well.
Okay. Well, so that's the view for the life insurance space. Keep these stocks firmly at the back of your mind. They've had a slightly terrible outing today. The question is, can they bounce back? What is doing well, though, is Britannia. What is doing well is Cipla. What is doing well is Sun Pharma. Sun Pharma is now at 489, 2.5% higher. Mayuresh, one final question really. Is there a pharma name that you would add to your portfolio currently?
So we are overweight, Neeraj, very frankly, on the pharma index as a whole. So I think most of the names are doing exceedingly well in markets like this. As I've maintained, I think the next couple of months, I think pharma will still be the sector because the earnings will still hold up pretty strongly, both from a Q4 and a Q1 perspective as well. We had discussed Alkem in the week gone by. My own sense is that within the large cap names, if somebody is still trying to hunt, and I'm not saying hunting value, I think from an earnings perspective, I think Cipla still looks very, very attractive from a large cap perspective. Yes, the stock has moved up significantly, but with the approvals that it has got specifically for its Proventil launch, the earnings actually go up 5-6%. And they're also targeting the institutional segment. So a couple of products, Tramadol, for example, I think can do exceedingly well over the next few quarters. And the margins should also hold up. Now, the only risk factor for pharma companies is obviously the FDA resolution for their plants. What happens to the Goa plant and the pricing issues for the drugs already in place from a generic perspective. I think that can just assume earnings to be flattish. But I think all these new approvals coming through and with new margin levers getting in place, I think pharma is a sector to look for. So yeah, I think Cipla to a certain extent, even Biocon, AstraZeneca, I think can be a good short-term momentum pick as well.
Okay, Mayuresh, we'll leave it at that. Thanks so much for joining in today and giving us your thoughts. Appreciate your time.
Thank you so much. Thank you so much.